This program provides education, not advice. Sponsors pay a fee for endorsements and interviews. See the truthayf.com disclosure page for details.
This is where technology, innovation, and personal finance come together.
This is the truth about your future with Rick Edelman.
It's Monday, February 12th. On today's show, the retirement plan of the future just might now be here. For decades, if you worked at IBM and you contributed to their 401k plan, IBM matched your contribution dollar for dollar up to 5%. So if you're making $100,000 and you put in $5,000, that's 5%, IBM put in another $5,000. You've effectively doubled your money, even before you get any investment returns. And it's actually even better than that. The $5,000 you put in is tax deductible, which really means the contribution only cost you about $3,500. But the account's now worth $10,000 thanks to IBM's match. That means you've nearly tripled your money before it got invested. Add in the profits from the investments that you choose, and, well, you can see why 401ks are so popular and why every financial advisor I've ever met always encourages that their clients contribute to their company retirement plan, especially when there's a matching contribution provided. In fact, I've always gone a step further, telling my clients, back when I had them, that they should contribute the maximum that they are allowed to on a pre-tax basis, regardless of whether their employer matches or not. My reasoning is simple. The more money you put in, the more money you're going to have in a retirement. That's what counts. But now, starting this year, IBM has terminated its 5% matching program. Instead, the company is putting that money into a new program for employees that it calls a retirement benefit account. In addition to funding this account every year with an amount equal to 5% of your salary, the account earns 6% guaranteed for the next 3 years. After that, the return will be equal to the 10-year Treasury. Now, the bad news is that that's not all that great a return. The 10-year Treasury is earning like 4% right now, compared to the potential returns you can get from the stock market. But the good news is you don't have to contribute a penny to this. All the money is coming from IBM. You still get to put your money into the 401k, where you can still go for those higher returns in the stock market. And when you leave IBM, you can take the money with you in this new account as a lump sum payment, or you can roll it over to an IRA, or you can roll it into your next employer's 401k. You can also take the money as a monthly annuity for as long as you live. Hey, that sounds a lot like a pension, and that is exactly IBM's point. If you're like a lot of other people, you're worried that you might run out of money during retirement, especially if you live as long as people like me say you're going to live. Thanks to exponential technologies and innovations in healthcare, we can expect to live to age 100 or beyond, which is great, unless your money doesn't last as long as you do. People therefore say they want to guarantee that they're going to get income for life, and nobody seems very confident these days about Social Security or today's pension and annuity products. So this new approach from IBM is designed to give its workers some peace of mind. The downside is that you're not going to earn as much as if you leave it in the 401k and manage it properly. But let's face it, most people will not leave their money in a 401k, and they don't manage the money there properly. So this new idea is a way to protect people from their own bad behavior. In other words, what was old is new again. 40 years ago, every Fortune 500 company offered a pension to their workers. Today, only 11% of private employers do that. They've all shifted to 401k plans. And IBM was one of the first to make that shift, and everybody else followed. So, now that IBM is again making this shift, will the rest of the Fortune 500 soon follow IBM again? I think they will. So the message for you is, get ready for a whole new kind of retirement plan from your employer. If you've been computing your future 401k balance based on the employer match, you need to redo your calculations because your future balance is going to be less than you thought once your employer stops that matching contribution. And if you've been managing your 401k correctly, the new plan isn't going to produce as much in profits as what you're getting now. On the other hand, if you haven't been maximizing your 401k, or if you haven't been managing it best, then this means you'll end up with more than you thought. This creates a whole new planning conversation for you financial advisors and a whole new business opportunity for the retirement planning industry. If you're a financial advisor, I invite you to join me for a practice management event with some of the most accomplished financial advisors and RIAs in the country. This event is open only to financial advisors and RIA firms, no fund companies or product providers. It's Wealth Management Convergence, and you'll learn all about the vital topics that matter to you right now. Generative AI, exponential technologies, the latest on longevity, estate planning, crypto, and a whole lot more. You'll also network with some of the most successful advisors in the country, and every session is main stage, so you don't miss a thing. No deadly PowerPoints, just engaging conversation. You can also sign up free for one-on-one meetings and our dine-arounds. You'll walk away with the investment strategies that your clients need today and that you can use to build your practice. Join me in West Palm Beach, Florida, March 10 to 12 at Wealth Management Convergence and connect with fellow financial advisors just like you. Register right now, use the link in the show notes, and enter discount code WMC2024. You'll save $100. Look forward to seeing you there. On tomorrow's podcast, a poem.
The Truth About Your Future with Rick Edelman is sponsored by Charles Schwab. Seeking clarity in your financial journey? Schwab makes it easy for you to be an informed investor with transparent pricing, low cost, and no fee to work with a financial consultant. Schwab clearly explains their fees and helps you understand the common costs you can incur based on recommendations from your financial consultant. Visit schwab.com or swing by one of their 400 local branches to learn more. That's schwab.com.
How should you think about Bitcoin? Turn to a specialist. For 6 years, Bitwise has been helping investors access crypto. Bitwise manages the world's largest crypto index fund. They also offer 6 crypto ETFs. You get cutting-edge insights, expert Bitcoin research, and a nationwide team to help. Bitwise helps investors and advisors navigate crypto with confidence. Partner with a specialist. Look for ETFs backed by Bitwise. BitwiseInvestments.com. Carefully consider the extreme risks associated with crypto before investing.
The information you need to plan for the tomorrow you want.
This is The Truth About Your Future with Rick Edelman.